there's a quick survey to fill out on ivmpodcast.com/survey. It lets us know a little bit more about who's listening to us. And you know what? We're going to do a few prizes. So, we'll do a random drawing of maybe 10 people and we'll send you all some swag. Remember, that's ivmpodcast.com/survey where you can fill out the survey.
On Paisa Vaisa, I've often talked about IPOs, but have you heard of IPQ? Instituted in 2019, IPQ or India Protection Quotient is an annual property by Max Life Insurance in partnership with Kantar that gauges the financial preparedness of urban Indians. In the recently launched IPQ 4.0, the protection quotient moves up 3 points to 50, revealing a stronger, more secure urban India at the back of a prolonged COVID-19 pandemic. The survey also reveals how urban Indians are reprioritizing long-term objectives of saving for children's education and retirement. Interesting, right? Well, you can read more on the findings by visiting www.maxlifeinsurance.com/maxlife-IPQ. Folks, welcome to Paisa Vaisa, powered by Max Life Insurance. I'm your host, Anupam Gupta, B50 on Twitter. My guest today is Sandeep Jethwani, co-founder dezerv with a Z, dezerv.in, which calls itself India's first expert investing platform. And folks, since this is an investment product, our standard disclaimer, please do your own research before investing. This podcast is not an endorsement. It is for your education, for you to learn more about what this product is. So, dezerv.in's website says they offer long-term portfolios to maximize your wealth, and we'll talk about how they do right after this short break.
Habits? Routines? How exactly do they help us get better? Well, to simplify it for you, tune in to the Habit Coach podcast. I am Ashton Doctor, and I'm going to be here to help you get better daily with some simple, easy-to-do habits that you can easily adapt to your life. So tune in to the Habit Coach podcast from Monday to Friday, because I believe that awesome lives start with awesome habits.
And welcome back. Sandeep, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you, Anupam. It's great to be here. I've been a big follower of Paisa Vaisa for a very long time. And obviously your sense of humor on Twitter is legendary. So love that.
Flattery might get you everywhere, but what I want to do is probably get you into the studio. I think it's been a while. Maybe our next recording we can have you over at the studio.
Would love to do that. There's no substitute for an in-person interaction, even after 2 years of COVID.
Look at that, folks. There you go. Someone who actually believes in this. And here I thought the world was moving towards work from home and all that. You actually believe in that, Sandeep, do you?
I do actually. As I think getting to know a person, especially when you're... So for us, we have built dezerv in the time of the pandemic, right? So most of my hiring, recruiting, building the team has happened in a time when you've not been able to meet a lot of these folks. I think one realization is that there is no substitute to actually meeting, understanding body language, building that personal connect. And that's something that I continue to do now, especially when we bring on senior folks into the team, trying to spend a lot of time offline with them before we do that. And that's when you really get the buy-in into the mission that you're building for.
Old school. Gotta love that, folks. So, but anyway, let's get on to this episode. Sandeep, very interesting background, right? Because dezerv.in was founded by veterans from IFL Wealth. You guys have got serious experience, and now you're building a brand new product. So, lessons on both the sides. First part, what is it like to handle the money of India's richest people? Because I think IFL Wealth is, probably the top 3 of wealth managers in India. And lesson number 2, so far, what are your learnings telling you from dezerv.in? Let's start from there.
Great start, Anupam. I think one is the reference to veterans makes me feel really old, but I think I'll let that pass.
I'm here in that, so let's not go there. Okay.
But to be honest, I think working with entrepreneurs, HNIs for the last 13, 14, 15 years, I think has been very instructive. One thing I've realized over time is that there's a huge difference between creating wealth and managing wealth. Creating wealth happens when you take a lot of risk. It's a lot of your personal time that goes into building that large corpus. But when it comes to managing wealth, you need a entirely different skill set. It's about more capital preservation, making sure you're diversified, etc. And think about when you're an entrepreneur, you're all in all eggs in one basket, which is the business that you're running. So I think that was one big realization that came across. The second thing was that process is key. Process is actually more important than what you actually end up investing in. How you got to the point of which instruments you selected is as critical, if not more, as what instruments are you invested in. So that was my big second learning when I think about the last 15, 16 years of doing this. And the third is that, we are often as investment managers focused on growing or delivering returns, but controlling downside is as important in the journey. And especially coming on the back of a strong bull market last couple of years, I think this realization is also a part of the experience that we've had from 2008 and those days. What I've seen happen is that while most portfolios were oriented towards outperformance, if you don't control the downside during bad markets, the users or investors are not able to live through the journey of wealth creation or compounding. Uh, and protecting the downside, Anupam, is just as important as optimizing for the upside. Because what happens is that if the downside in my portfolio is more than what I can handle, I will not stick with the investment journey. And that's when compounding breaks. That's when you cannot make the multiplier returns that long term investing delivers to you. So for me, these three big takeaways were very important over the last 15, 16 years. In some sense, that's also informing our journey at dezerv. The other thing also, like in terms of new learnings, and you asked me that question, what have we learned in the last year of doing this? One of the biggest things is that smart, successful professionals who are fully occupied with their day jobs and their families are today not able to give it enough time when it comes to their portfolios. And therefore, what ends up happening is a default decision making process, which is either you leave the money in the bank account and it really lies idle, earning 3% after tax, or you end up making ad hoc investment decisions, which is when you hear of some specific new idea or somebody calls you up or you are at a party and you hear somebody talk about a new stock. And suddenly, before you know it, you have this whole portfolio of 30, 40, 50 disparate instruments and so on. And the tragedy to me is that on one hand, you're working so hard when it comes to your career to be able to provide for the family, your own retirement, etc. And here's there's potentially a second equally large source of income, which is potentially getting neglected. So I think that came out very clearly as we spoke to a lot of users and people who've onboarded on the platform, that there is a space, a need for somebody to handhold these successful professionals.
Talk about that. Let's jump straight into dezerv.in. Maybe our listeners might not have heard about it, but folks, the website is dezerv.in. How do these lessons that you just spoke to me about translate into your startup? Okay, let's start from there, and after that we'll go into stuff like what's your target audience and stuff like that. So what does dezerv do? How is it? Does it embody the lessons that you've learned?
Yes, actually, it does in many ways, Anupam. And the one thing which we realize is today there are, if you look at the number of schemes, plans, options only on mutual funds, you're talking about 8,000 options. You're talking about nearly 2 to 3,000 investable stocks. Then there is this whole plethora of bonds, and suddenly there's these alternate opportunities. Here in front of an investor, you have therefore 15 to 20,000 investment options to choose from. Now, how does somebody do it on their own? And especially in a time of information overload, there is so much noise, so much data available about individual instruments. So for us, the first objective at dezerv was to reduce the amount of complexity when it comes to their portfolios. I think that was one big takeaway for us, that while we need to offer choice, how do we offer choice in a way that somebody can consume that choice? Because at the end of the day, ability to execute an investment is more important getting started with the investment journey. So that was one thing that we did. The second thing that we focused on is ensuring that these portfolios are created from a truly expert perspective. And I'll tell you why that was really hard. For example, it's very easy to recommend a mutual fund on the basis of last year's returns. But as experts, somebody who's seen mean reversion play out, etc., You know that what is necessarily worked in the last year may not work this year, and suddenly therefore you are creating portfolios which are potentially not optimized to perform in the next 10 days, 15 days, etc. They are more long term. So the entire focus is to build those kind of long term portfolios. And the third was that there is this whole set of alternative opportunities which was becoming interesting, on high return bonds, on pre IPO deals, on global funds, etc. The challenge with this was that one, investors did not have enough time, inclination, bandwidth to diligence them. But secondly, also the ticket sizes of access were really high. So for us to reduce that was very, very critical. And how we got around to doing that was interesting in the last 1 year. So I would say that for us, reducing complexity, delivering expertise, and thirdly, access to alternative investments is something that we felt very passionately about as we started the Deserve journey.
I like the sound of this. I'm just a little bit, I'm trying to understand what is your target audience, right? Because I've got this whole spectrum out here from someone who's, I don't know, maybe got his first salary and he's looking at 500 a month or 1,000 a month. And then I've got someone who's maybe mid 30s, senior exec, fairly large amount of money, but no time. Okay.
Mhm.
Where are you guys? What is your target audience and what is your value proposition to them? Or if, put in a different way, what specific problem are you guys seeking to solve also?
Yeah.
Makes me sound like a VC, but anyway, sorry about that.
No, Anupam, it's a great question. I when somebody asks me what is your target audience, I try and liken it to a sitcom called Friends, which we watched early on.
I
We
thought you
all
would say Shark Tank or something, but
nahi, wo nahi
sorry.
hua.
Okay.
So when Friends ends, okay, is when the Deserve journey really begins for somebody. When as a working professional, you start grounding yourself. You have responsibilities coming on you. Your quantum of capital has now increased. So till the time when you're starting off your investment journey, you're most of the times wanting to try out things yourself. After the capital becomes material and the time that you have becomes lesser, you suddenly want somebody else to manage it for you. That is the point in time in your life that we hope to position Deserve, which is somebody in the early 30s, who is obviously digitally native, who's comfortable with doing things on the digital platform, but at the same time needs some bit of handholding. And so for us, the clear positioning was that we are experts who build long-term portfolios for people who do not have the time or who do not want to manage it themselves. For us, the starting point, and we really believe in having diversified portfolios. For starting point for us is close to about 50,000 rupees. And the reason is that some of the fund combinations that we have on the platform, we want to ensure that different asset classes, different sets of instruments are there in that. And given the minimum ticket size of each one of those, the combined minimum portfolio size becomes close to 50,000 rupees. So that's where we start off the journey. Thereafter, investors can top up any amounts in the range of 15 or 20,000. Even the alternative transactions that we offer on the platform are in that range. So it's really somebody who's a sort of senior successful working professional in the early 30s who's now looking for somebody else to take onus and responsibility of their performance.
What are these guys doing now? Because you've hit on it's something that I feel very strongly about, because I feel that I can understand people who are new and, like you said, maybe at 25, he'll have his own product discovery, he'll do his own R&D, and he'll invest in whatever way he wants. But now that you're growing older and more senior and have more responsibilities, you don't have that kind of time. What are these people doing right now? And in your opinion or in your experience, what do they get right? What do they get wrong? I just want to explore this audience, because my sense is a lot of our listeners fall into that category, and I want them to realize, or at least understand from your experience, what they're doing right, what they're doing wrong, and a different perspective on how to handle their money, right? So let's talk about that.
So today, how do most people in this segment manage their money? One is that you're seeing a lot of these conversations happen, and that's actually a very good thing, where conversations about money, about investing have come into mainstream. There are a lot of financial influencers which are working to grow this space, and that's also exciting. But at the same time, what works for Mr. X does not work for Miss Y. And that is something that is potentially an issue that we see happening. when some of our target users are taking advice from or self research from online platforms. One of the biggest advisors in India is Google search. And
Tell me
most
his
people
name and address, and I'll bring him on the show, I guess. But sorry
you
about
should,
that.
the most successful advisor today.
Okay,
Uh,
sorry.
but the fact is that people end up looking for best mutual funds, googling for them, and making those investments. Then there are people who do deal with bank relationship managers, and that's also fine because at least there is some sense of handholding coming there. And finally, there are independent financial advisors. The challenge with bank RMs and independent financial advisors is there are simply not enough of them. There's a BCG study which talks about, I think India has nearly 230 advisors per million households. The US has 4,000 advisors per million households. So there is a massive gap. Even if you want a well meaning advisor, today there are not enough advisors available to be able to reach you or to be able to spend time with you. So the natural default is DIY investing, Google-based investing, friends and family recommendations, etc. And while everyone is well-meaning, is wanting to advise you right, their perspective and your life story are very different. So which is why most of the times when we see portfolios, they are pretty disjointed, spread across multiple instruments, and are not following the asset allocation or the approach that is right for you. And this really, Anupam, came out to us very clearly when the first crash of COVID happened in March 2020. I was sitting comfortably in my job at IFL Wealth, and a lot of friends from B school, from engineering, called up and said that have a look at my portfolio. And my common reaction would be that, boss, you are such a smart guy. How did it come to this? Like, how do you have all of these 20 mutual funds, 10 unit linked policies, etc.? And most of the time, the answer was that, look, boss, I didn't have time. I ended up Googling, or somebody told me something, I bought it, etc. So that's when we really felt that there was a need to do this. The current alternative is very ad hoc, very disjointed, and that needs to be solved for.
And I could have a separate episode on this because it's a pretty important topic, the value of good advice. I have covered this in the past. We've had a few RIs come on our show
Mhm.
and talk about this. But folks, you could check out those episodes. On this episode, of course, we'll talk about dezerv.in and the very interesting product that they have got. On the other side of this break, we'll be right back.
Love fighting?
We've got you covered.
Check out our show, The Fighting Goat, where we, the voices of the internet, Arjun Chipalkatti and Somesh Kamra, bring to you crazy weekly action on your favorite combat show, The Fighting Goat.
Be it commentary, breakdown, predictions, analysis of styles and techniques.
And of course, your round of favorite fighters.
You can listen to us every Thursday on the IBM Podcast app, website, and all major podcast streaming platforms.
And welcome back. Okay, Sandeep. So in this part of the episode, we're going to talk about your product, right? So just for the sake of transparency, what is the entity that you set up? I mean, deserved, because I've had all kinds of people on my show.
Yeah.
Just to understand, are you a broker, a mutual fund distributor, an RIA, PMS, or I don't know, a tech platform? As they say, just tell us about the entity from a regulatory perspective.
Yeah. From a regulatory perspective, Anupam, we are a mutual fund distributor first. We've recently received our brokerage license. We've not yet activated that. And we are before the regulator for our portfolio management license as well. And I think it's an interesting point. In my previous life, I've looked at all of these regulatory structures, etc. I think the key thing for me, which is important to the user or an investor, is transparency. It matters very little to the investor how you make your money. What is more important to them is that they should know how much money you're making from their portfolios. And that's something that's been ingrained in our DNA from the very start. So even before a investor makes their first investment on the platform, they're able to see how much money will dezerv earn from this. And that is super critical. While it's almost like a aha moment for a lot of investors when they realize that, okay, here is one advisor or one mutual fund distributor who's telling me how much they're making on my portfolio. But also it goes a lot towards trust.
Yeah, and trust is everything that matters, right? Because
Absolutely.
as someone who has this product, I'm sure you're looking at a lifetime relationship. You don't want someone who comes in and just takes, you know, advice from you on what mutual funds to buy, and then boom, he's gone. You would rather he stays, plays around, gets comfortable with the product. Have I understood that right?
Absolutely. I think it's a long-term journey, which is why for us, like what happens with the users' money after they come in, how do we engage with them thereafter? All of those things are very important, and which is why this whole humanized approach, which we are trying to deliver through a technology platform, sounds to oxymoronic words there. But what we are trying to do, Anupam, is first of all, even when the user onboards onto the platform, we do a 20 to 30-minute Zoom call with the user, where one of our investment experts gets on the call, walks them through the dezerv journey, and what are the principles on which dezerv is built, which is this diversification long term. We are not doing too much of thematic or some short term investments, etc. And the reason it is very important for the user to be familiar with this is so that the expectation setting happens correctly. We want to be the long term part of the user's portfolio. There are really credible people who are managing the short term bit, who can offer thematic solutions. But we are not doing that.
Mhm.
We are firmly focused on what we want the user to keep with us, which will compound over a period of time. So, this 20-minute, 30-minute Zoom call is very important. It helps. By the way, it's almost like for me, user research. So, every Sunday, the founders do these calls, and it's a huge learning experience for us, constantly staying in touch with our users. The second thing is, even during the journey, uh, we do a lot of video communication with our users. So people who are, let's say, in an aggressive portfolio, and let's say as we are recording this episode, the Ukraine crisis is playing out right now. Uh, we are explaining to the users what is happening there, how that is impacting their specific portfolio, and what are the recommendation or rebalancing changes that we recommend in that context. And this is again done by a real human expert on video communicating with the user. So a lot of that interaction integration that we are trying to build. So it's almost like the learnings from the wealth management days of interacting with people, but delivered through a tech platform.
So you've got an invite for your product, right? I mean, how does that work? I can't like just boom log in and then upload my KYC documents, stuff like that, and just start like today itself. Or like you said,
Yeah.
you used a very rare word that I don't hear very often. Real human expert. How does this invite work? How does this expert work? I mean, just walk us through the process out here.
Yeah, actually, Anupam, that came from this high bar we set for the experience that the user should have on the platform. And there are obviously some bits which are not instantly scalable, which is the number of high quality experts that we can deliver on the call. Even our alternative opportunities, they come in while we are doing it in smaller ticket sizes, they are limited by the quantum that we can deliver to our users. So we do not want anybody to come to the platform and be disappointed by the experience that they had. And therefore ensuring that because we've had now nearly almost like 17, 18,000 signups on the platform.
Wow.
So if I open the
And how?
floodgate,
When did you start? Sorry to interrupt you out there. You started in the
so
pandemic
sometime
or
in October or thereabouts, late
of
October of
21 or
21 of
oh, not
21.
bad. Yeah. So with what? Less than 6 months and 18,000 signups.
Yeah. So what is, I mean, to me, the fact that users, there are people who are hungry for high quality investment advice, I think was very, is clear. But at the same time, we did not want to disappoint them when they came to us. And therefore, to ensure consistency of experience, we said that we'll keep it invite only. We'll keep learning from the early experiences that our users are and the feedback that we're getting, and constantly keep iterating. Only once I feel that we can deliver this consistently to a very large number of users at the same time, will we throw it open, really speaking. So that's
Okay.
the approach. Yeah.
Sure. Let's just take this one level deeper now into the product, right? Because
Mhm.
your website says that you basically invest client money into quote unquote this portfolio consists of a diversified selection of funds depending on your investment style.
That's right.
Right? How does this work? Because when you're saying funds, I'm assuming you mean mutual funds, and if that is the case, then the thing is that you've got mass platforms like a Paytm Money or an ET Money, and there are many of them. Some of them have come on my podcast, and they do a fantastic job at fund selection.
Yeah.
So, how are you different, or how does this work in your case?
Yeah, absolutely. No, I think I have a lot of respect for the folks who are doing great fund selection. I think they've also built phenomenal models around this. I think for us, Anupam, the most important thing is that getting the core asset allocation correct, uh, and then looking at the right type of underlying funds. Because the user who's coming to our platform is very different from somebody who's going to Paytm money or ET money. Somebody who's going to Paytm money is potentially somebody who's looking at doing their own research. They are self-evaluating a lot of these options, etc. In our case, we are taking up a large part of that responsibility. So that is the first core difference. And yes, we do allocate assets across domestic equity, international equity, gold, and fixed income across mutual funds. On the equity side, the assets are broken up into active strategies and passive strategies. Passive is primarily a large cap where we believe it's very hard these days for fund managers to deliver alpha given the constraints that mutual funds are operating in. In case of mid and small cap, we prefer active managed strategies. On the fixed income side, also, there are high quality credit and aggressive credit strategies that we are running. International equities is something that we are very excited about from a diversification perspective, subject to SEBI reopening that window again. And lastly, on the gold side, which is again an interesting hedge, especially as we see it playing out right now. So it's a multi-asset portfolio. Now, once the user comes on the platform builds the right asset allocation for them. And then the expert team has curated different strategies for every asset class. So within equities, there's a certain mix depending on your risk appetite, etc. So it's really the tech platform putting together the right asset allocation mix, and the expert team at the back end creating the right instrument selection.
Fantastic. Because I'll come to that. Just again for the sake of transparency, how do you guys earn your commissions on the products that you recommend?
Yeah. So Anupam, like I said, we are a mutual fund distributor. So we earn commissions from the fund houses where we deploy our capital. But one of the most important things for us, like I said, is the transparency. So when a investor is putting money into what we call an integrated portfolio, which is a multi-asset portfolio, they're able to see how much is the income that dezerv will make from that portfolio on a monthly basis. And that is something they see prior to making the transaction. Cost optimization is a very important part of the portfolio structuring, which is why a large part of the portfolio, especially on the high quality credit as well as on the passive strategies, is primarily through index funds, which run very low cost and therefore very low commission ratios also. I truly believe that transparency keeps you honest. I think if the user is able to see how much money you're making, I think it's really what ensures that you are also optimizing the cost.
Okay, so we've covered the mutual funds part, right? Let's
Yeah.
get to the alternative investment because that is also quite interesting. And on your website, um, you've got pre-IPO startups, you've
That's
got
right.
smart debt, and you've got global opportunity. I've covered all three. There are lots of episodes within Paisa Vaisa where I've covered all three: the pre-IPO market, smart debt. I'm
I'll
guessing
talk
is
about it.
basically, yeah, and global opportunity is of course a pretty widely discussed topic now. So,
Hmm.
how does this part of your advisory or of your business work? Do I, as a client who has signed up, do I require a specific ticket size? Is there a lock-in? What kind of value add or expertise are you offering to investors here?
Yeah. So today, actually, Anupam, if you look across these three categories, there are thousands of opportunities available for investors, right?
Yeah, in 2008 there was zero, literally, right? If you
Zero.
remember the time when you started, amazing. Sorry, go on.
Absolutely. I think it's come a really long way, and I'm personally really excited about the alternative segment in general. I
Yeah.
think it will get much bigger, and retail investors will participate. We're already beginning to see this happen in a very wide scale in the Western developed markets.
Sure.
Now, what our promise to our users here is that we will originate these transactions, we will diligence them, and we will offer them to you at smaller ticket sizes. And when I say smaller ticket sizes, I mean 15 to 20,000 rupee ticket sizes. So when it comes to pre-IPO deals, we must have looked at close to about 15 to 20 deals and offered only 3 on the platform so far,
Wow. Okay.
because we have to be really cautious about the price that we offer it at and the quality of the deal, that because this is again long term capital. I'm not a supermarket which is offering everything on the platform and then letting the users decide. So we are sort of doing a lot of selection at our end, and which is why the way we built our teams on this side also are people from the right backgrounds to be able to deliver this. The person who looks after our private equity or pre-IPO practice is somebody who's been with Brookfield for many years on the private equity side. The fixed income bit is somebody who's been in the fixed income space for over 12, 13 years, with a very strong pedigree. The person who looks after our global assets piece is again somebody who's been working on Wall Street for over 15 years. Now, what we did on this side, on the global asset side, especially Anupam, was the fact that we said that today everyone is investing into global stocks, but is that the right way of necessarily going about making a non-India investment? Why are we only investing in consumer stocks or stocks that we hear about? There are a whole set of companies that we don't see or touch or feel, which are in maybe semiconductors or maybe in SaaS, etc. So why don't we leave this to experts who know their business, and therefore looking at evaluating global fund managers who typically have not been available to Indian investors, and offering this at ticket sizes of 25 to 30,000 rupees. On the fixed income side also, a lot of research in terms of which kind of bonds we will offer on the platform. But again, the orientation is to offer bonds with 2 to 3 year tenure, typically yields in the range of 10 to 11%. But not just doing name lending. So not just looking at the name of the bond and putting money there. A lot of work into the credit of the bond, besides looking at the credit rating.
Oh, hold on. So on the smart debt side, you're looking at an existing market. You're not creating a new market or creating new instruments and taking any risk on that side.
What we do is, Anupam, we go to the issuer directly and say that we will create an appetite for X crores, and therefore you issue new paper to us. So that's how we approach it, because the key thing here is to get the ticket size of face value down to a manageable amount of say 10 or 15,000 rupees. Most of these bonds, which are high quality and issued by corporates, are still at ticket sizes of 1 lakh, 2 lakh face values. So for us to originate them is very important. So we have to go to the source and tell them that I will underwrite, or I will make sure that 10 crores of placement happens, but you offer it to me at 1,000 rupee face values.
Okay, yeah. I mean, I kind of made that point out here because all three segments, right? Pre-IPOs, smart debt, and global opportunities are typically for savvy investors. Some of these, like a pre-IPO, like international investing, are in fact even unregulated as of now. And you would know that in pre-IPO, it's a little bit, there's no exchange, right? It's direct, but it's directly between buyer and seller. So the intermediary actually has a very big role to play out there. So I'm just, folks, just keep that in mind. If you're dealing in any of these segments, they are as of now, they're unregulated. I don't know when they will eventually get regulated. So one thing that I wanted to ask you, Sandeep, is how does this work, right? Because you're looking at something that is meant for savvy investors and throwing it out here for people with a lower ticket size. So, what about lock-ins and stuff like that? Because I think, say, if you take an example like an NSE, National Stock Exchange, if and that used to be, I don't know how the stock is doing now, but in the pre-IPO market, it's a pretty hot stock. But there are some things out there. So do you handhold the investor, walk them through these kind of tricky areas?
Yeah, absolutely, Anupam. I think it's very important to ensure that the investor is aware of the risk before they get in. So, which is even before they execute on the platform, a lot of education happens on the fact that these are locked-in instruments, that these are long-term, and liquidity is not instantly available. And even though we were doing it in the time of a very hot IPO market last year, which is why we were not comfortable offering a lot of these on the platform, because we are conscious of the responsibility that you have to investors. They are putting aside their long-term capital, and we want to bring long-term trust, and that's only the way we will also grow. So in that sense, there's full alignment. I think what we are so for example, we've done multiple sessions with our users who are on the platform about educating with them. So alternates especially, we've done over 3 sessions with our users, talking to them about the reasons why they should invest, but equally the reasons what they need to be aware of before they pull the trigger on it. I think it's a lot of education work ahead and something that we'll have to continue doing.
Yeah, because okay, let me put up the scenario for you. Okay, mid 30s guy or early 30s guy who's savvy-ish enough. Let's say he's got his existing mutual fund portfolio, comes to your platform, because I interact with a lot of these people. They think that, or maybe they correctly think that they've got their mutual fund sorted,
Mhm.
and they're coming to Deserve because, hey Sandeep, just tell me the hottest pre-IPO startup that you can give me. Give me a 10% yielding bond, or just give me, I don't know, some international hot opportunity that other guys are not offering.
Mhm.
How do you handle these guys, right? Because I get the category that doesn't have any idea.
Yeah.
These people are they a little bit tricky? Have you had any experience with this kind of an audience?
Yeah.
Because yeah, I mean, they come to you for the alternates, right? But then if you walk them through the mutual fund, they'll be like, yeah, come on, I already know what mutual funds are. Just
Yeah.
show me the hot stuff. Do you anything out there?
Yeah, so actually, Anupam, strangely enough, on the platform, you need to do the integrated portfolio, which is the mutual fund portfolio first before you get access to alternatives. So that's almost like a gating mechanism that is there, and that's something we believe is our responsibility to the people whose money we are managing. The moment we explain to them on this expert call about why mutual fund selection also needs assistance, what are the various downsides that have occurred in the past when it comes to self selection of funds, and how last year performance based investing almost always contributes to subpar returns. I think users get very convinced and they see the value in that. So I think it's a bit of an education process. I think we'll have to keep doing it for a bunch of years. We are not a transaction platform, so which means that we've chosen the harder path of like educating users and saying that I will onboard them slow and steady in a manner that they understand what they are expecting and what we are delivering.
I'm kind of glad you mentioned the we are not a transaction platform, because that I think is where the real tough part lies, right? Because there you're wading into stuff like process, philosophy, and not specifically performance, right? So
Correct.
it's a tricky part. I hope that you get it right. What happens if so? How does this work? Do what if I have my existing mutual fund portfolio? Can I come to you with that? Will that qualify for me, and then you will redesign it, or do I need to start a completely brand new relationships in mutual funds, and only then will I progress to the next step?
So, Anupam, stage one of our journey, we're focusing on the new wealth that our investors are creating, which is why I kept the entry level at 50,000. So a lot of our working professional friends can come in. But over time, we will also bring in the ability to sort of restructure your existing mutual fund portfolio and switch to our integrated portfolio. Having said that, Anupam, it's very important that we offer that switch in the right context. From there, not just to capture that asset, but also to say that, okay, if this is the right risk profile, uh, this is why it doesn't make sense for you. And until and unless I'm extremely comfortable that we are able to add that value on their existing portfolio, we will not launch that feature.
Yeah, because the thing is, that what 2 years I think, right? You've had almost 2 years of what seems to be an uninterrupted bull market.
Correct.
And when you have that, everybody's a stock market expert, and everybody's stock market portfolio, of course, is the best performing portfolio. And you have screenshots on social media. I'm just trying to see, how do you deal with that? Because, l-
Yeah.
like we said at the outset, you're looking at a relationship out here. So if someone comes to you with a simple thing, ki kya lagta hai? I'm coming to Sandeep and I'm coming to Deserve only because I want the highest possible returns. Is he
Mhm.
going to be disappointed, or do you think that maybe you have another perspective out here for him to consider?
I think, Anupam, to be honest, and this is something that I've discovered over a period of time, there is a strong group of users who is valuing quality and consistency over just maximizing short-term returns. And I think for us to start off with, this is a great set of users to work with. and that's what we are doing. Obviously, and you and I have seen this closely. When markets are volatile, the folks who had previously believed that they will follow Twitter handles and make investments also then realize that they need some bit of guided assistance. So I think when it comes to that community, it's a question of us biding time. And we will be around, we will be consistently doing what we know and we understand. And like I said, on the first part, there are enough people who value expertise, who value consistency, who value the fact that somebody is taking care of their capital without taking too many disproportionate risks with it.
Fantastic, folks. So there you go. That actually explains the philosophy and the product for you to consider. Okay, Sandeep, wrapping things up, what are the costs involved at dezerv.in?
So, Anupam, like I said, we don't charge our users. We make money from the funds. Typically, our retention is anywhere in the range of 40 to 50 rupees per lakh per month. So, which averages to about 0.4% or thereabouts on a blended portfolio basis. And that's all that users incur when they invest with us. There are no other, and this part is extremely well regulated by SEBI, AMFI, etc. So that's all we make. And I think the idea for us is to how to do that consistently over time so that the user's relationship with us keeps growing and we grow along with the users.
And on the alternative side, I mean, do you guys, or maybe since you're applying for the brokerage license, maybe then you would be charging a commission, or are you the market maker out here, or how does that work?
Yeah, so on the alternative side, currently we are just connecting the buyer and the seller.
Sure.
So in that sense, there's nothing immediately for us. I think on that, as the model evolves over a period of time, we will also learn what is the right way of earning a fee or commission. But as of now, there's no explicit charge to the user.
Yeah, I'd love to have you guys back here. It's been a pretty rough 6 months. We are in Feb 2022. Today, of course, it's 22nd Feb, the date
Yeah,
220220.
correct.
And you've got the whole Russia-Ukraine crisis happening. So it's been in very interesting 6 months. Nifty, I think, is flattish to maybe 4%. Mid small cap indices are down some 13-14%. You've got
Correct.
blue chips that are at 52-week lows. And I put this out in a tweet actually, which is why I know the numbers. And the only thing that is sustained is number of demat accounts and SIPs. So just a general conversation on markets. Where do you think they're headed? How are
Yeah.
things looking? Because you don't see this. I mean, the retail seems to be much more confident than the institutional money out here. What do you think?
Yeah, absolutely. I think, Anupam, I think the fact is that a lot of first time investors are continuing to join the markets, which I think is heartening from a long term perspective. In the short term, obviously, I think a lot of people, including Nitin Kamath, have flagged this as a potential concern that is happening. Because what we've seen happen is that when Nifty was at, say, 12, 13,000, a certain number of users came in. Then more people came in at 14, 15,000, more people came in, and sort of almost kept doubling down at every higher level. And therefore, when the markets fall, your average cost of entry is actually much higher. So that is something for us to watch out for. I think what is heartening for me is the SIP flows, frankly. And I think because that means that investors are consistently putting money into hopefully what they see as long term investments, and they will not trade on it, etc. So while on one side the SIP flows are encouraging, the number of demat accounts is also good from a long term perspective, but in the near term that can cause disproportionate risk to investors. As far as markets go, I think we've been around too long to know that there are cyclical interest rates are rising, and therefore with the premium that you pay for growth will change over a period of time. I think for us to keep reminding ourselves that over time quality dominates is something that is important. And even as markets are volatile, our recommendation to users is that focus on reorienting towards quality, because when markets correct sharply, our ability to handle downside, and the point that I was making early on, becomes very, very difficult. I've seen in 2008 portfolios fall 80-90% even, and at that bottom of that cycle, people tell us that I will never invest in equity in my life, and that's potentially the worst thing that you could do. So I think creating the right asset allocation, which makes sure that the drop in the portfolio is something that you can handle in these times, is I think extremely crucial.
Yeah, come over here. I mean, let's talk again after maybe 6 months, because I like the fact that you've got this group of veterans from IFL Wealth that has managed serious money, and then they're taking their knowledge and making it accessible to users in a certain format, of course. And you're going after process. So it sounds like a very interesting product. And I really hope to have you guys later on to see how your product develops. I wish you guys all the very best. So, folks, that is a wrap on this episode of Paisa Vaisa. My guest, Sandeep Jethwani, co-founder, dezerv.in. Sandeep, thank you so much
Thank you,
for doing this for the
Anupam.
listeners.
Really enjoyed this conversation. And like I said, have been a fan and continue to be of Paisa Vaisa. Keep doing the good work.
Oh, wow. Thank you so much, Sandeep. And I hope to have you in the studio. You guys are based in Bombay, right?
We are in Bombay. We are a stone's throw. So next time we'll do this in person.
We shall definitely do this in person, folks. That is it. That's a wrap on this episode of Paisa Vaisa, powered by Max Life Insurance. And listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcasts on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Hey, it's been another great week on the IVM Podcast Network. On All Things Policy, the hosts talk about India approving a fourth COVID-19 vaccine. This time is for children, and they discuss some of the challenges that are involved when you're doing clinical trials for kids. On the Filter Coffee Podcast, Karthik is joined by Amar Singh Patra, Managing Director of Spotify India, to talk about how Spotify's growth approach was different for India in comparison to other countries. On the Paisa Vaisa podcast, Anupam Gupta is in conversation with Praveen Jadhav, founder and CEO at Dhan. They discuss how stock trading has evolved over the last 10 years. On the Edges and Sledges cricket podcast, Varun and Ashwin dive into the first 3 matches by Team India in the Women's ODI World Cup. They also chat with Mr. Atul Srivastava, founder of SmartCricket.com, about player management. And the Simplified Gang gets into a group discussion about MBA ambitions. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. Also, don't forget to rate us on any platform that you might be listening to us. You can also check us out on YouTube. We have a webpage, ivmpodcast.com/YouTube, where a list of all our channels are. And finally, we'd like to thank our sponsors this week, SBI Life Insurance, Bank of Baroda, India Water Portal, and Max Life Insurance. Thank you so much for making this possible.